Good morning, guys. Now I'll teach you how private credit funds and private equity funds they invest in different financial instruments. Because private credit funds are buzzing now in Indian market as well. It's not a new concept. I would say it's a traditional approach, but I would say it's like private credit funds. They are the part of direct lending process, and private equity funds they invest in variety of different financial instruments. So we'll see that in details. I'll explain that concept in next 5 minutes. But before that, what I want, if you like this initiative, please click on like button and also bell icon button, because when we upload our new video, it will receive notification so that you can again go through it. All right, and if you like this initiative, don't forget to share this content with others as well. So let's start how private credit funds and private equity funds are different. See, private equity funds and private credit funds both are part of alternative investment funds. Alternative, it means apart from direct investing in stock markets, what are the other options you have? So that all other options including mutual funds, hedge funds, private equity, private credit, special purpose vehicle entity, and all other investment pools that comes under your alternative investment funds. Alternative investment funds. But when we talk about, let's say, private credit, see, credit it means we are talking about loans, guys. Alright? Credit it means loans. Alright? And funds it means again it's a pool. If you see any pool it means like again more than one investors, or I would say wealthy investors or institutions come together and they contribute funds to that particular pool. That pool again invest that funds into variety of different types of loans. All right. So it means here private and credit investors, when they invest in funds, and that funds invest in variety of different, as I said, loans like credit facilities, subprime lending, term loans, or any debt obligations or any loan obligations as such. If the private credit funds invest in all such options, so that loans becomes private credit funds. Private credit funds. Here private credit funds purely focus on only loan investment. So direct loan investment. If you want loan directly, you can take loans from the private equity fund. So it means any funds, if that fund is offering direct credit or direct loans or lending facility to the borrower, so that funds would be your private credit funds. Private credit funds. And most of the famous loan transaction types that you would see under private credit funds are term loans, subprime lending, and credit facility. Credit facility, it means it's like a personal loan. An individual, like what happened, we apply for a personal loan, bank approve that credit facility to us, and then we utilize that loans for our different purposes. In a loan market, what happened, companies apply for a loan or apply for a term loan or credit facilities. Why? Because they want short-term credit to maintain their day-to-day expenses and all. Same, even other private equity funds also apply to the credit facility to have a healthy cash flow in their private equity funds. So that's how private credit funds are now become very popular in private lending market. All right, I hope now you got the idea about what is private credit funds. It's like a private equity funds only, but those are little different from an investment perspective. Rest, NAV calculation, expense calculation, income, everything would be remain same. The change is only about investment theme, investment pattern, because private credit funds invest in different loan transactions. I hope now you got this. And now if I talk about private equity funds, see, already we have discussed about private equity funds. Private equity funds invest in swaps, loans, equity, CDO it means collateralized debt obligations. They invest in variety of different financial instruments through different investment strategies like venture capital. So it means risky startups like Byju's, Then LBO, leverage buyout. Any private company or any public company, if they are, let's say, facing in a debt crisis or cash crisis, or maybe if they are looking for any expansion as such, then private equity funds target to them and invest through their different investment strategies. What about MBO? MBO, it means management buyout. Management buyout, it means along with the investment, along with the equity or bonds investment in XYZ company, private equity managers will ask that company to appoint one of the designated person from private equity funds to their board. Why? Because that board member will see how that company is utilizing capital for their expansion and development purpose. So this is how there are the different strategies which comes under private equity funds, and private equity funds invest in different variety of financial instruments. All right. Now, if you ask me, sir, how we can differentiate private equity funds and private credit funds? See, private credit funds, they mainly focus or concentrate on loan transactions, and private equity funds, they focus on all different transactions including loans. So it means private equity funds can invest in loans, equity, CDO, means ABS, MBS, swaps, or any real estate funds or any real estate transactions and all. But private credit funds only focus on loan transactions. So it means private credit funds concentrate on only loan transactions. So this is how you can, understand both the terms private equity funds and private credit funds. What I believe in upcoming time, you would see accounting openings, trade processing openings, settlement openings, or bank debt transactions or reconciliations openings under private credit funds. And if you want to learn private credit, how private credit facilities work, what are the different facilities, how credit facilities work, what about the middle office and back office roles and responsibilities, how we perform Recon for pay down, draw down, or interest calculation, delayed compensation, cost of carry. All right. If you want to understand all of such key concepts under private credit funds, or even I would say private equity funds, then you can join my live training programs. I'll decode everything which is required to become private equity fund accountant. Just hurry up and enroll my program. All right, we'll see you next session on different topics. Meanwhile, in upcoming week, next Saturday, I have scheduled masterclass on hedge fund accounting, where we're going to discuss about end-to-end accounting entries and other key concepts, including equalization and fees calculation parts and all. So that masterclass will help you to do your, accounting interview preparation, hedge fund accounting preparation. If you are keenly interested to upskilling yourself, then I would say immediately enroll to that program. I'll see you other side. All right. If you need any help, directly text me. Thank you for watching this. We'll see you in next session. Thank you.